Joining us now to discuss BTC price and more is CEO of AdvisorShares, Noah Hamman. Noah, so the Federal Reserve Chair Jerome Powell speaking to lawmakers about his semi-annual monetary policy earlier. Let's have a quick listen.
Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes. Restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time.
All right, bumpy road ahead and hot inflation. What impact do you think will this have on risk assets like Bitcoin?
It's a good question. It'll have certainly some impact, right? I think it's more of an impact in the bond market and then its ripple effect in the equity markets. But I think like anything that's valued or traded against the US dollar, right, there will be an impact. I do think the secondary concern in terms of what the Fed is doing is the reduction of the balance sheet, which pulls a lot of liquidity out of the market. And to me, that's actually more challenging for risky assets, right? The less liquidity that's out there, and they've been putting it, into the market through QE, both from the financial crisis in '08 and then the pandemic. I think that's a far bigger problem for risky assets, pulling that liquidity out of the market, which probably needs to be done. But nonetheless, for equities, anything risky, it's going to be a bit of a bumpy year for sure.
Yeah, on top of pulling out that liquidity in the market, Powell was also saying that they're sticking to their warnings that banks should be quite cautious about getting involved in digital assets. How would you interpret that, and what impact might that have?
So I am just interpreting what I think that he is thinking, and I don't disagree with him, right? When you think about how a bank operates today, right, taking money from people who are saving it and then in turn loaning it out to a variety of different people, it sounds very familiar in terms of some of the challenges that we've seen in Bitcoin and in the crypto space. So I think if you're thinking about it with crypto and Bitcoin specifically in the way that banks operate today, I think his comment and his warning is correct. You can't really operate. We've seen trouble, I should say. Eventually, I think you'll be able to operate crypto like banks operate with US dollars. But I think for now, as most people have seen, it's best not to loan. It's best not to leverage. You have a significant amount of counterparty risk. So the infrastructure isn't there for crypto or Bitcoin to operate the way cash does within the banking system. So if he's thinking about crypto in the same way that banks use dollars, that makes sense to me.
And yet you believe that Bitcoin fundamentals are strengthening despite all the crypto contagion concerns in the last few months. Tell me why.
I do. I mean, for me, it's just the fundamentals, right? You were just showing some interesting charts on the price and where people stand in terms of people buying. But all the numbers year to date are up. Some of the numbers that I pulled, I want to make sure I get them right. But transactions year to date, and these are 7-day moving average numbers, but they're up 30% from roughly 250,000, again, 7-day moving average, to about 350,000. Active addresses on the Bitcoin network I've show up 10%. New addresses on the Bitcoin network year to date, and all these are year to date and 7-day moving average numbers, but new addresses up 18%. And then, of course, on-chain volume has increased dramatically, up around 40%, from roughly 12.4 billion a day to I have about 17.7 billion. And you've seen the impact of that on the underlying price year to date as well, going from roughly 16,000 to 22,000. So for me, the fundamentals look strong. How long will that continue? You can't be sure. I mean, as you mentioned, relative to the Fed, and again, for me, not interest rates, but pulling liquidity from the market, I think that can be challenged for any growing, innovative asset class area. We saw that with the innovation stocks last year and with crypto last year as well. And where people think we'll have a more easing risk and liquidity environment, it's helped Bitcoin, but could we see some volatility this year? We probably will.
All right, maybe you could also tell us about AdvisorShares has a managed Bitcoin strategy ETF called CYRP, CYRP. It offers exposure to Bitcoin. What kind of volumes have you been seeing? Has there been a chilling effect among institutions in entering Bitcoin ETFs?
There has. The fund's very small now. It's fairly new. It's about 8 months old, and investors have a variety of ways of accessing, the Bitcoin market. Obviously, they can do it directly. They can do it, with third-party custodians like a Coinbase. But many aren't comfortable doing it that way, right? And ETFs are an easy vehicle where you can put it into your brokerage account, and you have choices out there. ProShares has the long-only BITO, BITO is the ticker symbol for that ETF. But as you mentioned, ours, and thanks for mentioning that, CYRP, it's risk managed. So we work with Mark Yusko and the team at Morgan Creek, and he will decide when to be all-in invested or maybe only partially invested. He's still just partially invested right now, but when you look at the performance difference since its inception, I think it's a pretty significant difference. The number I have is roughly a 13% difference between buying and holding the long-only Bitcoin, BITO, or using something like CYRP. But if you look at the assets in the fund, it's small. One, in part being new, but I think two, in part what you mentioned, right? It's headline-wise in the Bitcoin space, it hasn't been, positive or very friendly, for investor dollars, especially when you're thinking about new investors coming into the space and not really understanding how to navigate it. ETFs can be a way to smooth that out, but the underlying is still volatile. And so I think over time, people will see something like CYRP as a way to get that exposure, maybe a little bit out of time, but also get something that at least has someone at the steering wheel trying to manage the risk associated with it.
All right, Noah. Thank you for joining us. That was AdvisorShares CEO Noah Hamman.